Kevin Durant has earned hundreds of millions dazzling crowds in the NBA. But today, his legacy is quietly being rewritten, one that is measured in companies, not just championships. In 2016, Durant founded 35 Ventures and began building a private investment empire spanning more than 100 startups in technology, finance, media, and sports. Most sports fans have no idea how far his off-court power actually reaches, or why his greatest financial wins may come long after retirement. So how did a superstar scorer become one of the most influential deal-makers in modern sports? For most NBA players, a career is measured in seasons and contracts. The reality is harsh. The window to earn at the highest level is short, and even the brightest stars know that the game does not last forever. Kevin Durant stands out not just for his skills, but for his awareness of this fact from an early age. By the time he reached his late 20s, Durant had already secured a place among the league's greats. He was Rookie of the Year, MVP, a multiple All-Star, and a two-time NBA champion. His on-court earnings, paired with endorsement deals from brands like Nike, Google, and Gatorade, put his career income well into the hundreds of millions. But even with that kind of money, Durant understood something most athletes do not realize until it is too late. Fame fades, contracts end. Only a handful of players build wealth that outlasts their playing days. Durant's curiosity about business did not come from a single moment. It grew quietly as he watched veterans retire and disappear from the spotlight. He started asking questions about ownership, about equity, about how to turn a few peak years into something that could last decades. The more he learned, the more he saw a pattern. The biggest fortunes in sports did not come from salaries. They came from owning pieces of companies, from having a stake in the next wave of innovation, from betting on others as much as on yourself. Ownership became the obvious path. The numbers are staggering. By his early 30s, Durant's NBA salary alone had crossed $300 million. Add in endorsements, and the total climbs even higher. But Durant saw those paychecks as seed capital, not a finish line. He wanted more than sponsorships. He wanted to sit at the table with founders and investors, to use his platform for something bigger than selling shoes or energy drinks. This mindset set him apart, fueling a search for opportunities that would carry his influence and his wealth far beyond the hardwood. For Durant, the question was never just how much he could earn, but how long that wealth could work for him. As his basketball career soared, so did his ambition off the court. That drive would soon lead him to formalize his business interests and start building something built to last. 35 Ventures began as an answer to a problem most athletes never solve. How do you turn fleeting superstardom into something permanent? In 2016, Kevin Durant and his longtime manager Rich Kleiman set out to build a business that could channel the energy and the earnings of Durant's basketball prime into real, lasting ownership. They did not want a portfolio that was just a scattered collection of checks written on the side. They wanted an operation with structure, discipline, and reach. From the start, 35 Ventures was never just an investment fund or a personal piggy bank. It was designed as a family office that managed Durant's brand, his deals, his philanthropy, and his future, all under one roof. The timing was deliberate. Durant was at the height of his career, with the resources to back bold bets and the platform to open doors. But instead of chasing quick flips or following the latest trends, 35 Ventures set out to build a system. Every deal would be vetted, every founder would get FaceTime, and every investment would fit into a bigger vision, not just owning a piece of the action, but building something that could outlast the game itself. Over the years, that vision has translated into scale. Today, 35 Ventures has invested in more than 100 companies, ranging from early-stage startups to established names in technology, finance, media, and sports. The firm operates out of New York, but its reach spans industries and continents. With each new investment, 35 Ventures has quietly shifted from a celebrity side project to a serious player in the venture world. It is not about splashy headlines or chasing unicorns. It is about building a platform that can spot opportunity, nurture growth, and create value far beyond the basketball court. The result is a business that does more than just manage money. 35 Ventures is the engine behind Durant's off-court empire, providing the structure and discipline needed to turn peak athletic years into decades of ownership. It is a model that is as much about longevity as it is about returns, and it all started with a single decision to formalize ambition into action. Kevin Durant's approach to investing starts with a simple filter. He sticks to what he knows. Every deal that comes across the table at 35 Ventures is measured against 5 core sectors: sports, media, technology, finance, and culture. These are not just buzzwords. They are areas where Durant has first-hand experience, deep curiosity, or a direct line to the people shaping the future. If a company does not fit one of these lanes, it rarely makes it past the first conversation. But sector is not enough. Durant and his team look closely at the people behind the pitch. They want founders who are relentless, creative, and who have a track record of turning ideas into real products. The product itself matters just as much. Is it something that changes how fans watch a game, how young people manage their money, or how culture spreads online? If the answer is yes, it gets a closer look. Durant avoids putting all his chips on a single bet. Instead, he spreads his investments across dozens of companies, more than 100 so far, knowing that not every one will be a winner. This strategy of diversification is not just about protecting against losses. It is about increasing the odds that a few breakout successes can make up for the ones that do not work out. The goal is long-term growth, not chasing quick paydays or hype cycles. This disciplined approach means saying no more often than yes. Opportunities in industries like sports tech or digital media get extra attention because they intersect with Durant's own journey. But even within those, the bar is high. Every investment must pass the test. Does it fit the sectors Durant understands? Is the founder someone he believes in? And does the product have the potential to shape the way people live, play, or connect? If you want to learn how the world's smartest athletes build wealth, like and subscribe to Celebrity Investments. Long before most people had even heard of cryptocurrency, Kevin Durant was already making early moves. Through 35 Ventures, he took a stake in Coinbase, a company that was building a platform for buying and selling digital currencies like Bitcoin and Ethereum. At the time, crypto was still a niche world, full of risk, hype, and uncertainty. But Durant and his team saw something different, a new kind of exchange that could bring digital assets to the mainstream and make them accessible to everyday users. Coinbase wasn't just another tech startup hoping for a quick exit. It was setting out to build the infrastructure for an entirely new financial system. The company's founders, Brian Armstrong and Fred Ehrsam, were betting that millions would eventually want to trade, hold, and spend cryptocurrencies as easily as cash. Durant's investment came before the company went public, at a time when the future of crypto was far from guaranteed. But that early conviction paid off in a way few could have predicted. By April 2021, when Coinbase finally made its debut on the Nasdaq, the company's valuation soared past $85 billion. For early backers like Durant, the paper gains were enormous. A relatively modest investment, made years before, was now multiplied many times over. It was the kind of outcome that most venture capitalists dream about, a single bet that could change the math on an entire portfolio. For Durant, It was proof that timing and conviction matter just as much as capital. The Coinbase story is about more than luck. It's about understanding when a new technology is about to break out and having the courage to get in before the crowd. Durant didn't just follow the headlines. He put his money behind a team and a vision that felt risky at the time. That willingness to act early, to back something before it was obvious, is a thread that runs through many of his biggest wins. In the case of Coinbase, it meant riding the wave as crypto went from fringe experiment to global phenomenon, with Durant positioned at the center of one of the most explosive financial stories of the decade. This wasn't a one-off. It was a case study in how the right timing, paired with real conviction, can turn a single investment into a generational win. When Kevin Durant put money into Postmates, he wasn't just betting on food delivery. He was betting that his own attention could move the needle. At the time, Postmates was fighting for space in a crowded market, up against giants like DoorDash and Uber Eats. The company needed more than cash. It needed a way to stand out. Durant brought something no ordinary investor could offer: millions of followers, instant credibility, and a knack for making things trend. He didn't just invest and disappear. Durant's relationship with Postmates turned into a full-court press. In 2018, he started showing up in Postmates campaigns, ordering meals in the middle of NBA training sessions, and posting about the app on his own social media. These weren't throwaway endorsements. Each post, each video, reached a fan base that trusted his taste and followed his lead. Postmates leaned into the partnership, sponsoring Durant's events and weaving itself into his public persona. The message was clear: if Kevin Durant used Postmates, maybe you should too. This kind of attention isn't easy to buy. For a startup, having a superstar's organic support means more than a few extra downloads. It's a stamp of approval that can help a company break through the noise. Durant's involvement gave Postmates a boost in visibility at the exact moment the delivery wars were heating up. While there is no public chart that shows a spike every time Durant posted, the timing lined up. By 2020, Postmates had expanded into thousands of cities, and the entire industry was surging as demand for delivery exploded. Then came the payoff. In July 2020, Uber acquired Postmates for $2.65 billion. The deal was about more than just market share. It was about brand, reach, and cultural cachet. For early backers like Durant, the acquisition turned an early bet and a few well-placed promotions into a real return. His role wasn't just as an investor, but as an amplifier, using his platform to help a company grow and sharing in the upside when it worked. In the world of venture capital, attention can be just as valuable as money. Durant understood that from the start, and Postmates became proof that sometimes the loudest voice in the room can help drive the biggest deals. Kevin Durant's investment playbook isn't built on wild bets or chasing headlines. It's about spotting patterns that matter to the next generation. That is what drew 35 Ventures to fintech companies like Robinhood and Acorns. Both apps set out to change who gets to participate in the world of money and how. Robinhood launched with a promise that sounded almost too good to be true: commission-free trading for everyone. Before Robinhood, buying stocks meant paying fees every time you traded, fees that hit small investors the hardest. With a simple mobile interface and zero commissions, Robinhood opened the doors to millions of young people who had never invested before. The app's design stripped away the jargon and complexity that kept so many on the sidelines. Suddenly, college students and first-time investors could buy shares with just a few taps on their phones. No Wall Street connections needed. By 2021, Robinhood had more than 22 million funded accounts, most of them belonging to people under 35. Acorns took a different approach to the same problem. Instead of focusing on trading, Acorns made investing automatic and almost invisible. Every time a user made a purchase with a linked debit or credit card, Acorns would round up the transaction to the nearest dollar and invest the spare change into a diversified portfolio. For someone who never thought they had enough money to start investing, Acorns turned pocket change into a foot in the door. The app's micro-investing model helped millions build habits that used to belong only to seasoned investors. By 2023, Acorns counted over 10 million users, many of them new to the world of finance. Durant's decision to back both companies was not just about financial returns. It was about aligning with tools that make money management accessible to everyone, not just the wealthy or well-connected. These are not just apps, they are gateways for a new generation to build wealth on their own terms. Durant's investments in Robinhood and Acorns reflect a bigger pattern, using his platform and capital to support ideas that break down barriers and invite more people in. It is a thesis that goes beyond basketball, and it keeps showing up in the 35 Ventures portfolio. Like and subscribe to Celebrity Investments for more athlete investment breakdowns. Boardroom began as an idea for a show, 6 episodes on ESPN+, where athletes and executives talked shop about the business of sports. But Kevin Durant and Rich Kleiman saw something bigger, a platform where the people shaping sports, culture, and entertainment could own their stories, not just appear in them. That idea became a full-fledged media company. Boardroom now runs daily and weekly newsletters, produces documentaries and series, and hosts live events that bring together athletes, founders, and creators. The mission is clear: show how deals get made, where the real money flows, and who is rewriting the rules. Boardroom has covered everything from the economics of sneaker drops to the rise of women's sports leagues, always with a focus on the business moves behind the headlines. Its projects include the Oscar-winning short film Two Distant Strangers, the Apple TV Plus series Swagger, and the Emmy-nominated documentary NYC Point Gods. These are not just credits, they are proof that Boardroom is shaping the conversation, not just commenting on it. Boardroom's reach goes beyond screens. The annual CNBC and Boardroom Game Plan Summit draws leaders from across sports and media to talk about the future of the industry. All-Star Weekend activations, F1 Miami events, and the Boardroom Members Club create spaces where deals and ideas flow in real time. For Durant, Boardroom is not just a media play. It is a way to amplify the next wave of innovators and to make sure athletes and creators have a seat at the table. In a world where attention is currency, controlling the narrative is its own kind of power. Made Hoops runs some of the most competitive youth basketball circuits in the country. For Kevin Durant, this investment isn't just about business. It's about shaping the sport he loves. Each year, Made Hoops hosts elite tournaments and leagues that draw top young talent from across the United States. These are not just weekend games. They are proving grounds where the next generation of stars gets noticed, coached, and challenged. The organization has built a reputation for identifying future pros before they make headlines, creating a direct pipeline from grassroots basketball to the college and pro ranks. Durant's involvement goes deeper than a financial stake. He is connected to Made Hoops through his foundation's work with at-risk youth, using basketball as a tool for opportunity. By backing Made Hoops, Durant is investing in the same kind of programs that helped launch his own career. The tournaments offer more than just trophies. They provide exposure, mentorship, and a stage for young athletes who might otherwise go overlooked. Parents and coaches across the country know that a strong showing at a Made Hoops event can change a player's trajectory. This strategy is both emotional and calculated. By supporting youth circuits, Durant is building relationships with rising players and their families, strengthening his ties to the sport well beyond his own playing days. It is a way to give back, but also to ensure that his influence and network will keep growing as new talent rises. Made Hoops stands as a bridge between Durant's on-court legacy and his vision for basketball's future, blending heart and strategy into a single lasting investment. Rich Kleiman is the engine behind the scenes at 35 Ventures. While Kevin Durant's name opens doors and draws headlines, it is Kleiman who turns ambition into execution. Every week he fields pitches from founders, vets new opportunities, and manages the growing team that powers 35 Ventures' daily operations. His background is not in basketball, but in business. Years spent as a talent manager, producer, and connector in the worlds of music and sports gave him a sharp eye for deals and a network that stretches far beyond the NBA. Kleiman's job goes well beyond picking startups. He is responsible for building the internal systems that keep 35 Ventures running like a professional firm. He leads hiring, making sure the team includes people who understand both the venture world and the unique opportunities that come with Durant's platform. As the portfolio expanded past 100 companies, Kleiman put processes in place to track investments, follow up with founders, and spot patterns across industries. The goal is to move with the speed of a startup, but with the discipline of a long-term owner. Deal flow is relentless. On any given day, Kleiman might meet with a fintech founder in the morning, review a sports tech pitch at lunch, and jump on a call with a media executive in the afternoon. It is this operational focus that allows 35 Ventures to act quickly when the right opportunity comes along, and to pass on deals that do not fit the vision. By building a real business infrastructure around Durant's brand, Kleiman has helped turn 35 Ventures into more than a celebrity venture. It is a platform that can scale, adapt, and compete with the best in the industry. Subscribe to Celebrity Investments to see how athletes turn fame into fortunes. Founders in the startup world don't just want money, they want what insiders call smart money. For Kevin Durant, the edge goes far beyond the size of his check. When 35 Ventures invests, companies gain 3 powerful advantages: attention, credibility, and distribution. Durant's attention is a rare commodity. A single mention on his social channels or a cameo in branded content can put a young company in front of millions overnight, breaking through the noise that drowns out most startups. Credibility comes next. The association with Durant's name signals to other investors, partners, and customers that this company is worth taking seriously. It's a stamp of approval that can open doors to new funding or strategic partnerships. Then there is distribution, access to Durant's audience and network. For a founder, this means not just a boost in marketing, but real traction with users who trust Durant's taste and follow his lead. These 3 vectors, attention, credibility, and distribution, are what separate a Durant-backed company from the rest. It's a form of value that can't be measured in dollars alone, and it's why so many founders compete for a spot on the 35 Ventures roster. The impact of this platform changes the risk equation, making Durant's capital more than just another investment. It becomes a force multiplier for growth. Every venture portfolio, no matter how carefully built, is a mix of stories, some that soar, and others that quietly fade away. 35 Ventures is no exception. For every Coinbase or Postmates, there are companies in the stack that never break out or even disappear altogether. That is not a flaw in the model. It is the reality of the game. Across the venture world, most investments will not pan out. Industry veterans know that only a handful of bets end up carrying the weight of the entire portfolio. The math is simple. A few runaway winners can pay for dozens of misfires. Durant and his team understand this from the inside out. They do not expect every company to win. Instead, they build a wide net, backing founders with big ideas while knowing that most will face tough odds. When a breakthrough happens, like an initial public offering or a major acquisition, the upside is so large it covers the losses elsewhere. This approach takes patience and discipline. It means accepting that some headlines will never come, and that the real test of success is measured over years, not months. For 35 Ventures, the willingness to embrace risk, spread bets, and stay focused on the long term is what keeps the engine running, even when a few picks fall short. The lesson is clear. In venture, the wins are rare but powerful, and it is the overall mix that tells the true story. Kevin Durant's journey from NBA superstar to investor offers a blueprint that anyone can adapt, no matter the size of their paycheck. The first lesson is to start early. Durant began thinking about life after basketball while he was still in his prime, using his playing years not just to earn, but to build a foundation for the future. That head start gave him time to learn, make mistakes, and let his investments grow. Next, focus on what you know. Durant did not chase every hot trend. He stuck to sectors where he had real experience or curiosity: sports, media, technology, finance, and culture. By investing in what made sense to him, he could spot opportunities others might miss and avoid risks he did not understand. Building a team is just as important as picking the right investments. Durant did not try to manage everything alone. Partnering with Rich Kleiman meant every deal was vetted by someone with business expertise, turning ambition into action and helping 35 Ventures operate like a true firm, not a side project. Finally, think like an owner. Durant looked for equity and long-term upside, not just short-term endorsement deals. Ownership means sharing in the growth of something bigger than yourself. Whether it is a few shares in a company or a stake in a small business, the principle holds true. Like and subscribe to Celebrity Investments. We are building a community of smart investors who want to turn skill and hustle into lasting wealth. Compounding is a quiet force, but over time, it can reshape the meaning of legacy. Kevin Durant's NBA salary and endorsements have already placed him among the highest earners in league history. Yet the story of 35 Ventures is about more than just adding up checks. It is about building equity that grows while the world is not watching. Each early-stage investment, each stake in a startup or sports team, adds another layer to a portfolio designed to outlast a playing career. As companies like Coinbase and Postmates moved from startup to headline maker, the value of Durant's shares multiplied, sometimes quietly, sometimes overnight. The real power lies in how these bets stack up. With more than 100 companies in the fold, even a handful of breakout wins can eclipse the losses and fuel new opportunities. The logic is simple. While a contract pays once, equity can pay again and again, long after the last game is played. No one can predict the final tally, but the structure is in place for Durant's off-court empire to rival, or even surpass, the fortune he earned on the hardwood. It is a hypothesis that turns the spotlight from athletic achievement to ownership, a different kind of scoreboard where the numbers keep climbing long after the buzzer sounds. Today, athlete-driven investment shapes industries far beyond the scoreboard. Kevin Durant's portfolio now influences what we watch, how we pay, and who gets a shot at opportunity. As more public figures shift from endorsements to ownership, the line between celebrity and chief executive officer keeps blurring. The future of wealth, and who builds it, is being rewritten in real time. Sometimes, the biggest moves happen off the court. Thanks for watching. What's your take on the rise of athlete investors?